Woo! Wow, what a volatile market in a volatile market. In the last week, we've seen interest rates at 7.25%. That was prior to this weekend's announcement that they've reached a agreement on the debt limit. So now what we're seeing today on Tuesday is just below 7%. So the question is, the last time we saw 7% interest rates was September. And that put the real estate market in a very slow time frame. Okay, now the question that I have is this. Will we see the same thing happen? Or now that we're more used to having rates that high, it was a real shock back in September, but it's not that big of a shock. I mean, we've been hovering around 6.25 to 6.5 to 6.75. So that's really only 0.5% to 0.25%. On the other hand, we are at high values. Nationwide, we're higher than we've ever been. The Portland market, we're still down, depending on the neighborhood, 2 to 7% below the peak, which was in June. Last 2 months, we've seen a little bit of appreciation. So again, it's hyper local. Another good thing that will keep, even with interest rates going up, inventory levels at the start in February of 2023, we're at 70% nationwide. More homes were on the market than 2022 in February. Now we're only 19% because we've seen a really good increase in the early spring winter selling season. So again, a couple things we have to look at. There's two indicators that are coming out this week, two different things on unemployment, Bureau statistics, unemployment. If unemployment is higher than expected, the Fed likes that. And that could mean a down pressure on mortgage rates. If it comes in the same, you might just keep a flattening or maybe a little bit lower. But if it comes in lower than expected, expect interest rates to go back up. Okay, I get this question all the time. Nick, should we wait? Well, knowing that we are still at historic highs for home values and there's not a lot of inventory on the market, that probably isn't the wisest decision, because history states if inflation continues to go up, interest rates are going to go up. That doesn't necessarily mean that values are going down, but it would put a little bit more pressure, especially for the people that have to sell. So overall, the market is in June. Can it stay kind of stable? That's kind of probably what I'm predicting to happen. We're not going to see a big boom or we're not going to see a big crash. But again, been in the business 26 years, never seen such a volatile market. It moves quickly. We saw 20% of our homes that we listed over Memorial Day go pending the first week. This is a big week. We're going to list close to 20 properties, and we will see what happens, because that gives us real-time data. If we see 40 to 50% pending ratio, that will tell us that people are more used to those 7% rates. If we're at 20%, then we can say, okay, it is going to have an effect. Will it have some effect? Of course it will. It's just the affordability index on homes are really challenging. Okay, so that will have an effect. It's just how much of an effect it will have. Until next time, this is Nick Shivers. I'm out.